Thank you. Yes, thank you very much. So I will not take us all the way down. I guess we're at something at 15,000 by now. But as mentioned, right, we are a leading European asset manager of unsecured and secured non-performing consumer loan portfolios, also smaller companies. We want to be the leading asset manager of unsecured and secured portfolios going forward. And now for the next few hours, there will be a break. We are going to take you through sort of the business, the industry, and the market. On the surface, it is a simple business. We buy something for 100, or something that had an original value of 100. We buy for between 10 and 30, depending on if it's a unsecured or a secured claim, if it's newly defaulted, or if it's really old. Right? So these things set the price, and then we simplistically need to collect twice that amount. Now, as in any business, when you start diving into the details, then you see that there are plenty of capabilities you need to have in place. Great people, great data, organization, great steering mechanisms. And we'll take you through those one by one. Now, and when it comes to the formula, since 2021, we have completely rethought how we do the business at Hoist Finance, right? Which has meant that basically we are treating every single one of these three core pillars different to what most other players do. It's not different or unique for uniqueness sake. It is just this has come out of this very, very serious strategic review. Now, these three pillars, I will talk a little bit more about them later, are wrapped in a banking regulated credit market company suit, right? Supervised by the Swedish FSA. This gives us restrictions and guidance on the balance sheet, etc., as Lars pointed out, and many benefits. So operating in this suit is expensive, right? We need top-notch compliance, top-notch risk, top-notch sustainability, anti-money laundering, internal audit, etc. Now, Hoist has been operating in this structure for 30 years. So this is in the DNA of everyone at Hoist. We will also be talking a little bit later. Christian will take you through it. We've communicated that we aim to become a specialized debt restructurer. And this is a status that we see as sort of further recognition of what we do brings value to society. This has been a long process with the European regulators, from banking package to banking package, and I think they have always seen the value of it. They've just not been able to push it through. Now it's in the third update of the banking package, and we will look at that. And we are going to be preparing for that now during the autumn, and be able to start on the 1st of January 2025. So if we go through these pillars one by one, investment management. This is of course the core of what we do. A question we get is, but is there going to be a supply out there? Right? We all know that the financial crisis is past now. NPL ratios in the European banks are going down, and at the same time, you guys say you're going to double the portfolio from 2021 levels. Is there going to be supply for that? Yes. We see here that absolutely the NPL ratios from sometimes double-digit levels in banks has gone down to around 5. We see an uptick in the last 2 years. So if we look at this stock here, it's about 370 billion euros of NPL stock. Now, for us, some of it is shopping malls, is half-finished real estate development projects. So what falls within our appetite would be around 250 billion euros. But those, let's say, I mean, you see from 1,000 to from 1 trillion down to 400. This is what has left the bank's balance sheets. Doesn't mean that this is collected, right? So this has ended up in various securitization structures around Europe, like in Italy, they have the famous GACS, state guaranteed securitization structure. In Greece, we have the HAPS, similar thing. There are other government players involved in various countries. There are, of course, the investors who at some stage will want to exit that. And there are the industrial players, who many of them at the moment are reconsidering their strategies, going maybe from hybrid to pure capital light, right? So the supply will be there, is our assessment. Now then, so how are we going to be able to grow the portfolio? Fabienne, our Chief Investment Officer, will take you through that in a couple of minutes. But it is there is a strong pipeline out there today, and we don't see any signs of that going down in the future. On the contrary, I think we are fewer players at the moment, and most likely also long term, who are bidding on this pipeline. Capital and funding. Diversification, right? 73% at the moment, so roughly between 70 and 75, we want to be deposit funded. We have an amazing, always there, funding source in the Hoist Spar accounts. It's not just a funding source, it's also a really, really good consumer offering. We have really well-read consumers who are saving with us in Ireland, UK, Netherlands, Germany, Sweden, Poland, Austria, and you know, they really do the research. Where will I get a good interest level at minimum risk? And then these people have obviously then chosen Hoist. And the rest, as Lars also mentioned, is then market funding. And as you may have seen this morning, we announced that we are investigating the possibility of issuing senior bonds right now. Right now, this area Christian will take you through in absolute detail in I think about an hour. But an incredibly important leg of the business, right, and completely different than our peers. Right? Then we come to the loan management leg, and I think this one is absolutely crucial, right? So we are active in 11 markets. We are looking at others, but typically these are where we are. This is where we own portfolios, where we have collections ongoing, and when you steer collections, we steer it on return on equity. So every single manager in the company needs to think income, needs to think cost, needs to think capital consumption, so that we at all times review our own back book, basically the portfolio we have. There might be segments that are not living up to our return expectations, and then we need to address them. Either we do it with an operational excellence type of project, where we deep dive in and try to change collection strategies and so on. Those typically take a very long time. Or we probe the market. Is there interest in any of our peers or competitors for buying this slice of the book? If the price is right, we will sell. This type of focus on the country units is absolutely key. You cannot be steered by EBITDA or collection performance or metrics like that. They have to have the whole picture. So our our units out there, business units out in the markets, they are not collection units. They are delivering the full earnings for this group, and they need to see the whole picture, and they need to take care of the whole picture on their local level every day. That is absolutely key. Obviously, we have an external return on equity target of at least 15%. Every single person in the countries are measured on their on the ROE as well. So obviously a little bit a higher level so that it can pay for head office and so on. But it is the same target. Every individual portfolio investment we do is also measured on the return on equity target so that it all is accretive to our external target. So 100% alignment between management and investors. Now, so how do we do this, the collection, and how do we do the loan management? Well, as part of the review in 22, we split loan management into strategic and operational. Now, strategic loan management, as the name indicates, is a strategic capability. This means it means this is where we set the collection strategies. This is where we segment the portfolios into various pieces. This is where we follow up on them, where we course correct, where we report upwards into the portfolio management team into a single data lake that we have centrally. The data, and the data points, so that we will always be able to learn, become better and better and better and better for every portfolio we buy. So always in-house, always local, not a team sitting in London or Stockholm calculating on portfolios all over Europe. It is very specialized. There are differences per country. There are differences per seller. There are differences by asset class per seller. So you need to be close to the seller. You need to build that relationship. Operational loan management, on the other hand, this is where the actual collections happen. So this is where we have conversations with the borrowers. This is where we send the letters. This is where we, if needed, initiate legal action, etc. And is by far the toughest job in the group. About 1,000 of our 1,300 people work in this area, and you know, ethics, empathy, and all our values, core values, are part of their everyday life, right? They really live by the credo, nice and determined, right? So very excellent work being done out there. Now, however, it is resource intensive. So what we do is that we look at, okay, how many portfolios have we typically won historically in this market? How many portfolios do we expect to win going forward? If we see that the supply is not as regular as needed to have a fixed cost base in a market, we will then adjust and outsource parts of the collections or the full collections where it makes sense. There is no dogma here that outsourced is better than insourced or anything like that. This is a pure business decision on a situation by situation basis. And this can fluctuate over time, but this is how we look at it, right? Every unit, every country individually, and then we follow that up. We're going to have the country managers of our largest countries up here in a panel in about an hour or so, and they will be able to answer specific questions about their markets, because they are all different and they all have their benefits and their challenges individually.